Hello traders, welcome back to my YouTube channel. In this video I am going to tell you how to understand imbalance in Forex.
What is imbalance, and more importantly, how to use it? Stick around to the end of this video and we will be putting imbalance into a live trade that runs in profit. So, imbalance. What does imbalance mean? Well, imbalance essentially put is the understanding of incoming or outflowing orders in a volumed way from financial institutions. That allows us to understand where large money has got involved and how we can also get involved based off of that information. So imbalance is quite a simple concept, right? If you take any price action, you take three candles. Candle number one, candle number two, and then candle number three. So here we have three candles. Let's just say they're all three down candles, right? And essentially how we understand imbalance is if you take the wick of candle number one and the wick of candle number three, if they do not meet, that area is called imbalance, right? Inefficiency. This is simply where this candle hasn't touched this candle, which means that at some point in this market there was so much volume incoming into the market or outflowing, depends on the scenario. The same is true in reverse. Looking at it from the different perspective, as price is going up, it's the exact same thing, right? Candle number one, candle number two, and let's just put candle number three down here. You can see that candle number one's wick here, candle number three's wick here. So inside of here is inefficiency. That's why we understand that an area like this level here is a valid demand zone that we can expect price to trickle down to collect the orders that are laying inside of here from the banks and to continue price in our desired direction. So what does this look like in the charts? Well, we can see this in the charts. A great example of this is as follows. If you take a blue candle, grey candle, and you do candle number one to candle number three, you'll see they meet up, right? So the blue candle is in fact fair priced. Now if you go up a minute and you get candle one, candle two, and candle three, you'll very clearly see that candle number one, wick to wick with candle number three, doesn't meet, right? And that is in fact an area of imbalance. Anything in between there, anything in between this right here is in fact inefficiency, imbalance, right? Same thing. Some people call it inefficiency, some people call it imbalance, some people call it both. And that's how we decipher whether a supply or demand zone is actual. And the reasoning behind it is simple. It's that a large amount of volume came in at that area. So provided it meets the other criteria that is in alignment with a imbalance, then it shall hold. And when essentially price comes back to that area to mitigate, let's say price goes back here and then continues, this here then becomes fair, right? It's now balanced. Price has revisited the area, thus closing off the imbalance. At any point until it doesn't come back, it is still imbalanced, that we understand that price will likely in the future at some point come back to, right? And that's the same for everywhere. So this imbalance that we have all the way up here with candle 1, 2 and 3, this wick doesn't meet this wick right here, you can see that at some point in time price will come back to mitigate this level of price. Now you wasn't able to get involved in sales in this area at that time, but not to worry, there is in fact another area of price in which there are remaining orders. If we actually just look at the flow of orders at the moment, we can see that we are in a bearish downtrend, right? This being the high that just put in the new low. If we look above in this price leg, if we draw our premium and discount tools, then we will understand the anything above premium is supply. Okay, so we have a level of inefficiency imbalance right here, but it's in discount pricing. We have a level here that is in premium pricing, which has yet to be broken, but will be broken. And then this level has been mitigated. And then finally, we have the edge of the leg, which is better because it's actually in premium pricing. This area right here is unmitigated. If you take candle 1, the up move, the blue move candle down, the blue move candle down, you can see that 1 and 3 do not meet. Therefore, in between, this right here is imbalance. Now, until price comes and fills this gap, there is an imbalance there, and that's what we use the understanding of, and that's where we understand that the banks got involved with a large amount of volume. And so if you're in alignment with the other criterias that we do have, then we will understand that the probability is that this level holds because it's in alignment with order flow. Which it does so. And then what have we just had right here? We've had the imbalance, the inefficiency filled right here. So the inefficiency that was lay here has been mitigated, pushed up, collected the orders. Not enough buyers in the market to take out the highs, more sellers, as clearly seen by order flow. And there you are. Targets are hit at the week low that represents liquidity to the downside. Now, once again, we have more inefficiency. We have imbalance up here between this 1 candle, 2 candle, 3 candle. All of this in here is inefficiency. Imbalance, same as for this one here. So at some point, maybe not today, maybe not tomorrow, but at some point those levels are going to get met. Now this one has just filled in 50% of the imbalance, which sometimes is valid enough. But to really understand whether a supply-demand zone is valid, that supply-demand zone should have a level of imbalance behind it, and the reasoning behind that is, of course, that the banks are pumping money in or out of the market at that exact area, and for those reasons, those are areas of price that we can get involved in. And that is how we use imbalance. So guys, if you did like that video, do go ahead and hit that subscribe button and like this video if it did bring any value to you guys whatsoever, and I'll see you guys in the next one.